Imagine if adopting Bitcoin as a collateral asset to recollateralize this dollar system, that 50x in growth could provide another 100x of capital expenditure, new productive capacities in AI and robotics. This merging of public markets and like private crypto Bitcoin companies, and these TradFi people have no idea what they're doing. The value that is coming into Bitcoin is leaving other assets, US treasuries, German bonds. We raised $1.44 billion in 8 days just by selling equity on the public markets. Like, that's absurd. MicroStrategy has done all of this work and bought all of this Bitcoin. They only own 3%.
And they've been at it for 5 years. Ryan Gentry. I'd say it's been a while, but it hasn't been a while. We catch up behind the scenes quite frequently, but it's been a while since you've been on the show. 5 years. 5 years.
5 years depriving your audience of me, Marty. I mean, but in serious, 5 years, that's a long time. Especially a long time in Bitcoin, isn't it?
That's basically a third of Bitcoin's life. We've gone without catching up on this show.
That's a wild way to think about it. Yeah, I mean, 5 years ago, November 2020, Bitcoin was at what, like mid-teens?
Let me check.
15K? So they were just started buying.
I go on the 5-year chart. It's been it doesn't even come up on the 5-year chart at the go to all. What was it, November 2020?
I think so. Yeah.
Yeah, we were climbing. We were at 17K. 17K. Ran all the way up to 65, back down to 16.
Mm-hmm.
Here we are sitting at $89,332, and everybody thinks our pets' heads are falling off. Bitcoin.
They don't know how good they have it. They don't know how good they have it.
They really don't. In honor of our first catch up on air in over 5 years, I'm going to have a beer for you OG freaks who were there.
Cheers.
For the original Ryan Gentry appearance on this show. We drank a lot of whiskey. Talked a lot about the Lightning Network, talked a lot about Texas. Things were much different at that point, and we will probably do a retrospective on what happened between now and then and look at what we were saying back then, what actually happened, and where we may have been wrong, where we were right. But first, you've got some big news, personal news. Launched the Bitcoin Infrastructure Acquisition Corp. Looking for Bitcoin operating businesses. Another SPAC, equity SPAC, hitting the space. A lot of attention on this part of the market over the last 6 months. What are you trying to do here? What are you doing?
I'm really excited. I think, in the 5 years since we've talked, the whole ecosystem, Bitcoin, and most importantly, the companies building Bitcoin products and building products around Bitcoin, the asset and the network, we've all grown up. We've all grown up significantly. And I think public markets, as seen by the ETFs, as seen by MicroStrategy, as seen by kind of the wave of, digital asset treasury companies last year, or this year rather, public markets have a huge appetite for Bitcoin. And so I was approached earlier this summer with an opportunity to raise a SPAC, a special purpose acquisition corporation, that's charged with taking an operating Bitcoin company public. And so we just completed that IPO this week, raised $220 million. Very excited to note that, the deal was 5 times oversubscribed. Again, like there's a really big appetite amongst public markets investors for Bitcoin company exposure. They're excited about the possibilities and the prospects of, Bitcoin native companies and what they can do from a cash flows and growth perspective. And want to be really clear here that, this is not a DAT. This is not a treasury company. I'm not interested in competing with Michael Saylor, with Jack Mallers, with Adam Back, et cetera. My 5 years at Lightning Labs, was all focused on building, real products and services and working with Bitcoin focused entrepreneurs that have customers and again, cash flows. And so that's where I'm specializing. That's where I'm focused, is the companies who've been building Bitcoin products for the last, 7, 10, 12, 15 years, right? Those are the companies that I'm focused on, and I'm focused on wanting to take them into public markets in a manner that materially benefits their companies, right? I think one thing that I've learned at least, is, being a public company, there are specific advantages, specific things that you can do as a public company that you just can't as a private company. And I think there is a subset of the Bitcoin space that is ready to take advantage of those. And I think in order to take the next leap in their businesses and to provide kind of the next amount of value to their customers, to us, right, as Bitcoiners, they need a vehicle to take them public. And I'm really excited to have the opportunity to provide that opportunity to, one or a couple of our favorite companies.
Well, maybe since you framed it in that way, maybe it is a good time to do a retrospective on our conversation from 5 years ago. From what I understand, you re-listened to it recently, and we're laughing not only at our mental state, but the conversation we had. And I think maybe the retrospective, we jump into it right away. It's just to really highlight where we thought the market was 5 years ago, where we thought it was going, and how it's actually progressed since then, and why you think now is a good time to be launching this particular SPAC, looking for operating businesses in the Bitcoin space, serving Bitcoiners.
Yeah, I think that the core part of our discussion, that as I was listening back to it, I was like, we were onto something here, and are onto something here, was, we talked about how, like, what the Bitcoin revolution really is, a war for the world's capital, a peaceful, economic war. But it's, there's, as you're growing a brand new store value from scratch, necessarily the value that is coming into Bitcoin is leaving other assets, right? And is leaving US Treasuries, is leaving German bonds, is leaving, you name it, right? All the other assets in the world, and coming to store itself in Bitcoin. And I think we talked a lot about the order of operations of kind of how that, again, kind of war, quote unquote, progresses. And one thing that we bonded a lot over when we first met was how enthusiastic we were over how, like, kind of the first cohort of big companies that really got Bitcoin and were interested in Bitcoin was the energy industry. Group of work mining, from, we talked a lot about oil and gas back in the day, but, like, look how that has panned out, right? Like, all of these companies that, went public, a lot of them actually via SPACs, right? That were mining companies in 2021, 2022, have since become hugely important in kind of the AI build out space, right? Where they first kind of got started just focusing on Bitcoin mining. They, built great relationships with energy producers and utilities and all the folks in the energy industry generally. And then, now have these hyperscalers just paying them outrageous amounts of money to leverage the skills that they built in the Bitcoin industry to build out kind of this next great thing in the AI space. So I think that's kind of where things started, and where we've seen, again, public companies that took the leap and became public, really benefit from being public companies, and from having their name out there and being able to raise the capital. Like, didn't Iron just raise like $1 billion at 0% coupon convertible note, right? They don't have to pay back for 5 years or something like that. Like, it's absurd what's been happening. And I think those are all companies operated by Bitcoiners, right? That are out making a difference in the world, building with Bitcoin treasuries, operating their company on Bitcoin principles. And I think that's super important.
Yeah, I'm looking it up. It was Iron just did 2 billion, 1 billion at 25 basis points, 1 at 1, and Clean Spark did 1.15 billion earlier this year, or last month, less than a month ago. As well, yeah. So they're raising a ton of capital. Is that the only advantage to being public in your mind? That's a lot of what we hear. And I mean,
I think when I think about it from first principles, I think there's three. There's three main categories that I would pin it down to. I think number one for sure is being able to raise, like having a public trust from a kind of debt and equity capital perspective. And I think there's kind of two ways that you can raise the money. So first is like, being able to raise debt capital through these convertibles or through preferreds like MicroStrategy is doing. Like you can't do that as a private company because you don't have the public equity to pair with the debt capital. You can only really do that as a public company at being able to issue securities. The other thing is, I had the great pleasure of talking with MicroStrategy CEO Phong Le yesterday in Austin. He's doing a little roadshow, and he was talking about this new USD reserve that they built, the dividends, and he was like, look, we did this mostly to combat the FUD. Like it helps me sleep a little bit better at night, but it wasn't really necessary. But we raised $1.44 billion in 8 days just by selling equity on the public markets through the ATM, right? Like that's absurd. Think about it. I mean, you're, vaunted venture capitalist now, Marty. Like, how hard is it for a company to raise or private company to raise $1.44 billion? And on like what timeline, even $100 million? Like on what time long does that take?
It depends if you're in AI right now, maybe not as long as others, but it's not as easy. It's definitely not as easy. And,
right. And so of course, not every company is MicroStrategy. So that's, not every company can do that, but it's materially easier as a public company to be able to do that type of stuff. But that's not the only benefit. I think that's the most obvious one. The second one that I think is very important is public trust from a business development perspective. Having the audits, having the kind of rigor around your financials, having the just trust that you're a public company, it just makes it easier to do deals, especially with kind of banks and the more conservative entities in public markets. It's just easier to do that type of stuff to get those doors opened if you're already a public company versus a private company. And so I think, especially for the kind of the Bitcoin companies that are financially minded, financial services minded, that will materially improve their ability to gain new enterprise customers. And, also having a public equity, right? Letting your customers share in the upside of your business, right? That was always the argument for tokens in the shitcoin crowd, right? But you don't need a token. You just need a public equity to...
maybe it'll be tokenized. Benefit. Maybe that public equity will be tokenized at some point in the future,
And at some point, maybe. We'll see. I know that there's, I'm following the Clarity Act with interest. I'm not super optimistic, but maybe they'll figure out something that works there. It's possible. But so two is, I think, that public trust from a BD perspective and institutional customers will kind of, you have more substance as a public company than you do as a private company, and retail customers like getting to share in your upside is a big deal. And then third is just hiring and retention, right? As we were talking about before the call, like not all potential employees like being paid in illiquid stock options, right? Being able to pay your employees instead in RSUs, restricted stock units, and like public equity that they can, sell whenever they like. That's makes a big difference for a certain class of employee, right? Employees that have families or, different situations and aren't really willing to take the startup risk like being a public company allows you to just hire and retain a certain class of employee that you just can't get otherwise. And so I think those three are like, those are real material benefits that help offset, the downside of being a public company. You have to spend a couple $1 million in compliance costs and audit costs like every year just to be public, right? And so there has to be some benefit for that additional cost. And I think for a certain class of companies, those benefits very materially outweigh those costs.
Yeah. And I mean, and all these benefits can only be gained too if you have something legitimate to bring public. So I think that's, again, going back to the retrospective and really leaning into the timing of this and why it's right now is, I mean, when we met 5 years ago, outside of industrial scale miners, how many companies were in the right spot from a product market fit, revenue, cash flow, EBITDA perspective for this to even be viable outside of maybe Coinbase and a few others. And why?
Well, that's exactly what I think is so interesting about thinking about this time in terms of the order of operations that we talked about. Because the way we talked about it, it's like, look, if you wanted to, as a Bitcoin community, like march forward and grow, Bitcoin's total market cap as like a measurement of world domination of reserve asset, right? Like first you'd want to start with the energy industry. And you'd want to make sure that energy executives, energy companies were like aligned and bought in on Bitcoin, understood the value prop, and were hodlers and incentivized to, protect 21 million. And then kind of the next area you want to verge into is financial industry, is, TradFi. And you'd want to make sure that, companies were holding Bitcoin on their balance sheet. You want to make sure that the financiers were, comfortable with Bitcoin as collateral. And we're starting to adopt Bitcoin as a collateral for, people to borrow against. And I think we're right smack dab in the middle of that right now. And I think there's a lot more work to be done there, but it's interesting that like this current cohort of, Bitcoin companies, crypto companies, if you'll excuse the term, that are going public, right, are companies like BitGo, companies like Kraken, companies like Circle. But they're this kind of next wave after Coinbase are the kind of fintechs built on Bitcoin and crypto rails. And that makes sense, right? That's kind of the next wave of companies that got started in Bitcoin, that started making a lot of money in Bitcoin and are at the scale where they can be public and bear the costs of being a public company, but also tap the upside of everything, all the new things you can do as a public company.
Sup, freaks? This rip of TFTC was brought to you by our good friends at Bitkey. Bitkey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself, who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, Bitkey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a Bitkey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20.
Sup, freaks? This rip is brought to you by our good friends at Silent. Silent creates everyday Faraday gear that protects your hardware. We're in Bitcoin. We have a lot of hardware that we need to secure. Your wallet emits signals that can leave you vulnerable. You want to pick up Silent's gear, put your hardware in that. I have a tap signer right here. I got the Silent card holder, replaced my wallet. I was using Ridge Wallet because it's secured against RFID signal jacking. Silent, the card holder, does the same thing. It's much sleeker, fits in my pocket much easier. I also have the Faraday phone sleeve, which you can put a hardware wallet in. We're actually using it for our keys at the house too. There's been a lot of robberies. They have essential Faraday slings, Faraday backpacks. It's a Bitcoin company. They're running on a Bitcoin standard. They have a Bitcoin treasury. They accept Bitcoin via Strike. So go to slnt.com/TFTC to get 15% off anything, or simply just use the code TFTC when shopping at slnt.com. Patented technology, special operations approved. It has free shipping as well, so go check it out. Well, let's lean into the upside, particularly in the context of these Bitcoin financial services firms. I mean, you talked about the relative difficulty of raising just capital compared to a company like MicroStrategy, Iron, CleanSpark. You can just tap ATM and pull in 1.44 billion in 8 days. For the financial services, particularly those building around the use case of Bitcoin as collateral, or Bitcoin as an asset, you can put in an IRA or whatever it may be. How important do you think access to public markets is for them to flourish?
I think a very simple left curve model of it, which, we also talked about 5 years ago. I think the bell curve meme was new. And so we talked about that a lot, but it still remains, I think, the best model of the world. And I try and be as left curve as possible, as much as possible. Think about a Bitcoin lending business that's lending against, dollars against BTC. And that, I think, is, although, of course, we would all love to be just 100% Bitcoin only, spending Bitcoin through, all the Square terminals that support Lightning now, which is a fantastic development. There just necessarily is a need for dollars if you're operating in the modern world. And I think if you're lending against Bitcoin, your main challenge right now is that interest rates are high, right? I think, unless you're borrowing, I think CleanSpark borrowed $100 million against Bitcoin from 2Prime, and they paid 7 to 8%, 7.75% or something like that, which is, that's probably the best rate against Bitcoin that I've seen, because they borrowed $100 million. If you're retail and you're borrowing 50 grand, 100 grand, something like that, I mean, you're paying 10, 12%, something. That's steep, right? So you think about these businesses that are lending, their cost of capital, what they're doing is they're borrowing dollars from somebody else, and then they're lending those dollars back out to the end user. So their kind of ability to make money is 100% dependent on how can they lower that cost of capital? How can they lower that cost to borrow? And that's something that's really only unlocked by accessing bigger pools of capital. And the way to access those bigger pools of capital is to, do what MicroStrategy is doing in terms of getting credit ratings, which necessarily involves, to get the best possible credit rating, being a public company, selling debt for lower and lower costs, and just kind of through growth, through selling securities, through working with the credit agencies, getting that cost to borrow down closer to, whatever a bank has to pay, which is closer to 4 or 5%. So there's a big delta between this current cost of capital for these private Bitcoin lenders and what kind of the terminal cost of capital should be. And I think that's only unlocked by being a private company, or being a public company, sorry.
And I think it's very important to dive into the details of this too, because I think a lot of people will look at the rates attached to the Bitcoin collateralized lending desks that are currently private across the industry, and they see 10, 12, 14%, depending on where you go, and they say, oh, these guys are ripping us off, not understanding that the company itself would love to give you a lower cost of capital, but they have liquidity providers to that desk that are demanding a higher cost, and they simply take a little rip on top of that. There's a delta between the cost at which their lending provider gives them the cash and the cost at which ultimately you take the loan at. And the company issuing the loan, or your counterpart, whether any of the companies offering collateralized loans, just takes a little rip on top of that. And to your point, to make more money in this product, you need to basically get more volume, more liquidity on that desk. And so the only way to attract that more and more liquidity is to get those rates down, the cost of capital down for the end user. And then the margins on top of that cost of capital will be similar, but you'll just have so much more volume that you're able to make more money. And I think that's
Yeah.
an unfortunate reality of the current state of the Bitcoin lending market, as a lot of people think the companies offering these services are ripping off the end customer, but you're really beholden to the risk takers on the other side who are offering private credit dollars.
Mhm. Exactly. And I think that was a really interesting thing that, following from MicroStrategy said yesterday was, this is public information. When MicroStrategy got their credit rating, right, they got a B- credit rating. The ratings agency didn't value their $59 billion worth of Bitcoin at all, right? Like it didn't count for their creditworthiness, despite the fact that it's $59 billion, right? And that's obviously a mistake and obviously an oversight. But one thing that is just, again, if what's really happening here is kind of Bitcoin is competing to store all the world's capital and just kind of needs to be convincing bigger and bigger institutions of its creditworthiness and of its safety as a store of value, as he talked about how next year the big banks are going to start releasing custody products for Bitcoin, right? Morgan Stanley is going to not just offer IBIT, but is going to offer being able to buy Bitcoin that they custody, or BNY Mellon or somebody custodies. And the next step beyond that is just logical for them to be able to count your Bitcoin as collateral in a mortgage or something like that. But before these big banks can do that, they're going to have to go to the credit agencies and say, hey, I want to lend against my customers' Bitcoin. I want to give them some dollars for it. How should I score this? Can I lend it at 40% loan to value? Can I lend it at 70? What's the right number? You got to give me some guidance. So, although of course we all got into this to disrupt the banks or to allow people to be their own banks, ironically, just due to the power of Bitcoin and the incentivization that it takes hold in all institutions that touch it, where all of a sudden, they start acting in its best interest. The big banks are ironically going to be, kind of acting on our behalf to help Bitcoin on its next leg in its journey, right? And I think that's one of the things that, to me, running the SPAC, I see that and I say, oh man, Bitcoin native lenders, Bitcoin companies that we all know and love, you have a year to start getting big, or else these banks are going to come in and it's going to be really tough to compete with Morgan Stanley rates if they're custodying Bitcoin, right? It's going to be really tough to compete with the entities that have the lowest cost of capital in the world, unless you really start raising money and getting big now. And so I think there's a sense of urgency for these companies if they want to maintain their business, and they don't just want to sell out to the banks, to take the leap now.
Yeah. How do we square this round hole? Is Bitcoin being co-opted? Is this good? Is this what we want? It's inevitable.
It's a great question. Bitcoin is for enemies, right? Bitcoin is for enemies. And I think the co-option question, my Bitcoin is not being co-opted because I hold my own keys and I run my own node, right? And I think as long as a plurality of Bitcoiners have that attitude and maintain their self-sovereignty, and as long as protocol development is focused on making that barrier to entry as low as possible, then it doesn't really matter what the big institutions do with their Bitcoin. MicroStrategy has done all of this work and bought all of this Bitcoin. They only own 3% of the network, right?
And they've been at it for 5 years, and they had to
They've been
scale
at it for
up.
5 years, and who is gonna come out and buy 650,000 Bitcoin to eclipse them, right? I totally understand and get that the focus on TradFi adoption appears antithetical to Bitcoin principles. But again, it's like, if the goal is to become the global reserve asset and the global reserve currency, like at some point, these big boys are going to have to buy it, right? And if you really believe in what Bitcoin's about, and you really believe in, Bitcoin's principles, and you focus on the fundamentals of like, what does actually decentralization mean? One big entity buying 100,000 Bitcoin does not affect Bitcoin's decentralization at all. Bitcoin's decentralization is up to all of us to hold our own keys and run our own nodes, right?
Yeah.
And I think as long as, the protocol development focus isn't focused on how do we make it easier for MicroStrategy to buy more Bitcoin, which is, I don't think any of that has come up in the Knots versus Core debate. Right?
Let's touch that.
I think we're fine. I think we're okay. I really do.
No, I do too. And it's been tough this year because you've seen, obviously, the digital asset token companies, SPACs, hitting the market this year really forced people to be like, what's going on here? And if you're not pragmatic and nuanced, it's easy to, and again, I'm not trying to speak from a high horse or come off as pompous, but I've thought long and hard about this, and I've had to grapple with it myself. And it's like, yeah, to your point, like, what did you expect to happen to see that for Wall Street and all these institutions to see us plebs riding the monetization wave and not participate eventually? Like, this is part of the process. And to your point, it's incumbent upon us to make sure that we're holding on our own keys, running our own nodes, supporting payments infrastructure to make Bitcoin everyday money, which you dedicated the last 5 years of your life to, or many more, 6 or 7, and you still are. And it's just like, yeah, we're playing in this ocean with bigger fish now, and we just got to hold our own. And that's like at 1031, like we have the Bitcoin Development Co. SPAC out there right now, and we're looking to acquire just an operating business that wants to Bitcoinize, right? And like that's similar. Like if Wall Street's getting in, we want quote unquote mainstream to get in as well. So you want businesses that have nothing to do with Bitcoin but would benefit from incorporating Bitcoin, whether that's if they're an energy company into their systems, if they're a large retailer into their payment systems, and then obviously any company, no matter what industry you're in, I think it's incredibly advantageous to use Bitcoin as a treasury asset. And this makes people uncomfortable, but this is what growing up is like. Look at us. 5 years ago, I had a beard, during COVID lockdowns. I was drinking whiskey like a sailor. And now I got a nice sweater on, enjoying a nice pint of Guinness on a Friday afternoon. Were
you a dad yet 5 years ago?
I was, yeah.
You were. Okay. So that's been a big change. I guess that wasn't a change for you. That's obviously been a big change for me, right? That changes your whole perspective on what's important and where priorities lie. And I have, a little one now and another one on the way. And growing up, it happens.
I was a father of one at the time, and 2 more have been added since the last time we talked on air. Yeah. And the more children you add, the more chaotic in a good way that it gets.
In a good way. It's all wonderful for sure. But it is, I think, going back to like what we're doing here is we're helping Bitcoin progress and like soak up more and more of the world's capital as it becomes the global reserve asset. One thing that I think a lot of us just didn't understand was, what that actually requires in order, the cypherpunk looks at kind of institutional mandates and, investment agreements and all this stuff is like, that's just nerd lawyer talk, right? Like you should just buy the Bitcoin. But these pension plans, these insurance companies that, legally they have to hold 40% of their money in bonds or in like public securities, right? Like that's the brilliance of what MicroStrategy is doing, is they're kind of meeting these investors where they are who want Bitcoin exposure. And they're saying, okay, well, here, we've created this little funnel where you buy our preferred because you can. We'll give you what you want, which is this cash flow so you can, pay off your pensioners and all that different stuff. And we'll go and buy Bitcoin with the proceeds because you can't, right? And I think that's kind of the state that we're at, where needing to do these kind of clever financial engineering in order to allow these big pools of capital to get the Bitcoin exposure that they desperately want and need is just the work that's required for this next step. And I think, again, what we were talking about before we got on the call, or before we started recording, is the thing that we didn't understand 5 years ago was that rather than Bitcoin out competing with all the world's capital and being adversarial against all the nation states of the world, what we found out is oh no, the US dollar system desperately needs Bitcoin. It desperately needs more high quality collateral to support the system, right? All of these different fiat institutions are struggling just as much as individuals in the face of inflation and rampant money printing, right? And they need a lifeboat, just like we do, but they're not able to just buy Bitcoin with the dollars, right? They need different sort of structures and products to be able to do so.
Sup, freaks? Have you noticed that governments have become more despotic? They want to surveil more. They want to take more of your data. They want to follow you around the internet as much as possible so that they can control your speech, control what you do. It's imperative in times like this to make sure that you're running a VPN as you're surfing the web, as we used to say back in the 90s. And it's more imperative that you use the right VPN, a VPN that cannot log because of the way that it's designed. And that's why we have partnered with Obscura. That is our official VPN here at TFTC, built by a Bitcoiner, Carl Dong, for Bitcoiners focused on privacy. You can pay in Bitcoin over the Lightning. So not only are you private while you're perusing the web with Obscura, but when you actually set up an account, you can acquire that account privately by paying in Bitcoin over the Lightning Network. Do not be complacent when it comes to protecting your privacy on the internet. Go to obscura.net, set up an Obscura account, use the code TFTC for 25% off. And when I say account, you just get a token. It's a string of token. It's not connected to your identity at all. Token sign up, pay with Bitcoin, completely private. Turn on Obscura, surf the web privately. Obscura.net, use the code TFTC for 25% off.
Sup, freaks? 2025 left many wondering, was this an underwhelming year for Bitcoin, or the quiet setup for an extended bull run? On December 17th at 1 p.m. Central, join Preston Pish, Connor Brown, and Unchained for Bitcoin in 2025, a year in review. A concise breakdown of the macro trends and policy developments that truly shaped the year. You'll hear what mattered most, where the market stands now, and what these inflection points reveal about Bitcoin's long-term direction. If you want clarity on where Bitcoin has been and where it's headed next, don't miss this event. So go register now at unchained.com/TFTC. That's unchained.com/TFTC.
It's almost like it's too good to be true. You're like, wait a second, what's happening? And that's how I would attribute this reality to the very understandable apprehension. Like, are we being co-opted right now? It's like, maybe some people are, maybe some institutions are.
Mm-hmm.
But I think the stronger force is this external recognition of, oh crap, we've got a big problem here, and Bitcoin is a tool that can help us begin to solve that problem. And I think maybe taking a slightly different direction too, I bring it back to the Bitcoin industry, specifically in the companies within it, and why they should go public now, get access to public markets, and then putting it in the broader context of SPACs, which particularly post 2020 had a negative connotation associated with them. A lot of SPAC offerings were simply, in retrospect, proved to be sort of exit liquidity mechanisms. But I think you and I, we've talked about this at length over the last few months. Like, the timing for these Bitcoin companies, again, if you're mature, you're You've got revenue, product market fit, your cash flow, and you got material EBITDA. And if you basically take what we've been discussing today, particularly with the institutional foray into Bitcoin, if that's happening in earnest, like the upside potential, growth potential for these companies is massive as well. As we're looking at a $1.8 trillion market cap right now.
Mhm.
There's Vanguard opened up the floodgates, Bank of America 1 to 4%, Square rolling out to 4 million merchants. Like the need for individual consumers, enterprise consumers to get access to Bitcoin infrastructure is only going to increase from here.
I couldn't agree more. And I think, like, obviously, I think what's important too is, one of the things that, my chairman of my board, Parker White, who's an Austin Bitcoin guy, worked at Kraken for a number of years, and is now, the CIO of a public DApp. One of the things that he kind of convinced me on when he was pitching me on the opportunity was, he was like, look, this merging of public markets and like private crypto Bitcoin companies is happening now. It's a one-way merge. And these TradFi people have no idea what they're doing, right? Like they have no idea what value looks like. And so if nobody who understands where like real value is in this community, in this ecosystem, don't stand up, all this TradFi money is going to go into a million avalanche stats, right? Like it's just going to all get destroyed. And all of these capital markets people are going to feel like they got scammed, just like what's happened in every single crypto boom and bust cycle we've seen so far, right? And so I think there's a responsibility to try and direct some of this capital into some of the great companies that we know exist, right? And that we know are around, and put it in the hands of quality, responsible entrepreneurs that can really put this capital to work and, not only build great companies, but also be great spokespeople for Bitcoin. Like, are we happy that, obviously Saylor does a great job, but are we happy that the other people that get to talk about crypto all the time is fucking Tom Lee?
Hey, we're going to 200
Right.
in January of next year.
Like, is that the representative, or do we want, I don't want to put any people on the spot, but just like people that come top of mind, like, wouldn't we love to have Alex Leishman talking about Bitcoin on CNBC and giving that perspective, right? Wouldn't we love to have Elizabeth Stark? Wouldn't we love to have, Joe and Drew from Unchained? You go down the list, right? There's all of these wonderful representatives of the Bitcoin community that have focused on, their customers and their products and their companies. But I do think at some point there's a duty to educate the rest of the world and traditional financial markets on like what real value looks like. And instead of just hoping and being disappointed when the masses fall for shitcoin scams over and over and over again.
What about the Zcash stat? That's a big one.
Just unbelievable, right? But I mean, we've been in this ecosystem long enough that, like, I'm not mad. I'm just disappointed.
Yeah. Well, I mean, this brings up a good point. This is something. Like, obviously, I think you'd be an incredible representative, but it is frustrating. Like, fucking, excuse my language, almost 17 years in. Because I remember when I first got in, like 2013, 2014, you had Brian Kelly on CNBC. Tom Lee was around back then. They let Trace Mayer on, but obviously he's had his downfall. And like, still, the quality of people actually like highlighting where the value is. And listen, credit where credit's due, like Saylor and other people. Now, like the last 6 months, it's been all this DAT thing where it's like, all right, don't worry, it's going up. It's like, buy the stock. I think strategy is far and away like separated and demarcated from a lot of the DAT focused companies that have hit the market this year. But like, again, I think really bringing the public the message of like, hey, this is superior savings and payments technology that is objectively better when you actually touch, see, and feel it. I mean, you saw this and you see this at Lightning Labs, like the ability. I was just talking about, I was on Nostr, we were live streaming with Walker 3 hours ago, and people were sending Bitcoin to his wallet peer to peer as we were live streaming. It's like, that is a Twitch competitor that nobody realizes yet, but it is superior. Like, you don't have to wait once a week, once a month, whatever it may be. Like, you are getting paid immediately. You have the proliferation of other second layer solutions like Arc, Spark, Cashew Mints or eCash Mints, Liquid. These are all becoming interoperable. Obviously, the development at the protocol layer with Miniscript and what you can do to secure your collateral is getting extremely robust, and it is true sci-fi tech that is better. And we need, in my opinion, and I think in your humble opinion as well, more people telling this side of the story, which I think is being very underappreciated. Obviously, we have, luckily, I mean, I think outside of Jack Mallers, I can't think of anybody who's going on CNBC and telling the story like this.
Exactly. And I mean, I think there's Bitcoin has always had, a little bit of not a marketing problem, but like
it's had a marketing problem. You can say it.
Yeah, it's had a marketing problem, right? And I think Bitcoiners are not predisposed to the salesmanship and the marketing that needs to happen, but it's important, right? It just is. And I do think that, now that we're at this point and at this level of scale, I think there's a real responsibility. There's kind of two choices that you have when you've been in Bitcoin for a long time. One, which is, respectable, is to ride off into the sunset with your Bitcoins and just go enjoy your life, right? And be financially secure and kind of do whatever you want. The other choice is to give back to the community that's given you so much and to, incur a little bit of self-sacrifice to help get other people into the lifeboat. Right. And I think that that's kind of a little bit where we're at, where, as we've heard, this year has seen a ton of OGs selling, right? We're over 100K. If you bought Bitcoin at $10, $100, something like that, congratulations. That's fantastic. You retired your bloodline. That's awesome. But I would challenge those people that there's more going on here. We're not done. 100K is $1.8 trillion is not the terminal end of Bitcoin, right? Like, we got another 100x to go to really fulfill the mission. And this next leg of the journey is just necessarily takes a little bit more than just buying and holding, right? There's more convincing to do. There's more convincing of, entities that aren't just retail people looking to make money, right? This is like serious institutions that need to be convinced of volatility, of safety, of, that the custody of the Bitcoin is with reputable entities, et cetera, et cetera. Like, there's more work to be done on this next leg of the journey. And I think we need all hands on deck. I think that's kind of the next thing that I'm really interested and really passionate about doing. And, I think I have a unique skill set to be able to do that. And so that's why I'm focused on this SPAC and on working with, the best Bitcoin founders to take this, next leap of the journey with me.
What you're going to find a founder with an operating company, spitting out cash flows, set up for growth. But before you find that founder, it's going to be you. You're going to be on CNBC. We've heard the pitches from Saylor and everybody. It's digital capital. It's the best asset on earth. What would your unique pitch be? Why we should lean into Bitcoin? Like, why Bitcoin? Why now? Is it a store value hedge? Like, how would you paint the full picture? Because I think you are particularly suited to do a good job of it.
One thing, a term that's been rattling around in my head for the last several months has been look, I'm outside of Bitcoin. If you remember, my background, I'm an engineer, right? I started my career at Intel, which was
talked a lot about in the first episode.
We talked a lot about it in the first episode. It's like, it was I think, arguably the preeminent American manufacturing company, for like our entire lives, right? You had kind of, you think about the, GE, Boeing, Intel, right? Intel does massive investments in manufacturing in the US. And so one thing that I'm like extremely interested in and have been following very closely is all of the efforts to kind of reshore manufacturing in the US and like bring back, those post-COVID bring back supply chains and things like that. And so this is a long-winded way of saying that, like, in order to do that work, and another thing we talked about 5 years ago was that like Bitcoin is just as much a hardware revolution as it is a software one, right? But in order to do that work, we need to, without inflating everybody away, we need to re-collateralize the financial system, right? Like the financial system is dramatically under-collateralized, and without re-collateralizing this financial system, we will not be able to successfully make the capital expenditures we need to make to bring back manufacturing and like ensure American national security, right? And I think if you adopt that frame, what asset can we use to re-collateralize the financial system, right? Like, it's not going to be treasuries. Gold's been doing great, obviously, but like gold kind of had its time as collateral and we're not going back to it. Really, the only option that you have is Bitcoin, right? And imagine if adopting Bitcoin as a collateral asset to, lend against, to re-collateralize this dollar system as Bitcoin goes from 1.8 trillion to $100 trillion, right? Like that 50x in growth could provide, depending on what multiple, like another 100x of capital expenditure of dollars issued in order to, provide new productive capacities in AI and robotics and space travel and all the things that we want to invest in. But like, you need that underlying collateral in order to do that lending to productive entrepreneurs. You have to have it. And so I think that's the thing that I've been really interested in, is like thinking about Bitcoin as the tool that allows us to re-collateralize the financial system and invest in all of these new productive economies that we're so excited about.
Yeah, another way to say it is we're for the Bitcoinization of finance. It's not the financialization of Bitcoin, right? It's
1,000%. I mean, that's Elizabeth Stark is my former CEO boss and CEO at Lightning Labs, is phenomenal at kind of all things branding and turns of phrase. And so she was about, Bitcoinizing the dollar. That's what we were doing with Taproot Assets. And I think similarly to your point, Bitcoinizing the financial system, building it, allowing it to, grow on a firm, solid foundation based on 21 million, based on lack of rehypothecation, based on, auditing and verifiability. That's a better way to organize as we move into the future.
Yeah. I'm not sure if you caught it, but the national security strategy memo that went out this morning about like the Trump administration. It's pretty profound. I've only read a few pages. I recorded with somebody right before this about it. If you're listening to this episode and you listened to the previous episode, you heard it with Susan. But just this whole idea of like leading into reshoring, we're getting away from the global wars. We're going to focus on the Western hemisphere. And I think that's another great frame for Bitcoin, is like, hey, not only does the system need to be re-collateralized, but a lot of the banking infrastructure and securities infrastructure, if we're being honest with ourselves, is running on tech that was built in the 70s and it's not fine-tuned. So we have this incredible re-industrialization or re-engineering of the financial system potential. We can build a new banking stack, a more sovereign banking stack, obviously a modern banking stack on this protocol as well. So there's like a number of different narratives. So there's re-collateralization, the supports of the energy infrastructure build out, and like one that I don't think is getting enough tick yet. Maybe it's because the timing's not right. Order of operations type thing is like literally. I mean, I think Ethereum probably, for being objective, does a better job of marketing it this way. But like, you could rebuild the financial system on top of Bitcoin, and it is happening. And I think that, like, seeing that in the minds of not only the administration but the American people, of like, hey, there's an incredible opportunity here to do something brand new. It's going to create a ton of jobs, a ton of opportunity, and when it's all said and done, the monetary and financial system is going to look completely different in a better way.
One thing that's really interesting about that, and I agree with you, is we talked a lot about this with, Taproot Assets was at Lightning Labs. The protocol was predominantly focused on stablecoins and bringing stablecoins to Lightning. But there was this whole other aspect to it of, doing tokenized assets. And I always kind of thought that was like a little silly and like, why would you, mint a tokenized asset instead of, just issuing equity on a stock exchange? But one thing that was really interesting as we talked with, other folks is, if you grow up and you create a company in Mexico, in Guatemala, in Colombia, like, there isn't a capital market. Like it doesn't exist, right? Like you can't go and raise money or do the things that you can do as a US company in these other places. And one thing I've always thought about Bitcoin is like what the revolution really is it's extending like the best property rights the world has ever seen to anybody with an internet connection, right? Like if you want to have Texas level property rights, like you got to be in Texas, right? If you're born in China or, I don't know, name a worse country in terms of property rights, like you can't get that level of assurances over your property unless you move to the jurisdiction of Texas, with the exception of holding your own Bitcoin private keys. And I think extending that same level of property rights to people that want to issue equity, that want to raise debt, that, want to do these different capital markets activities via the Bitcoin blockchain is an unqualified good, right? And I think to your point, like I think that will unlock a tremendous amount of prosperity by extending these property rights to, because, as we know well from some of the best entrepreneurs I worked with at Lightning Labs were based in Nairobi, right? Mm-hmm. We're based in Medellin. We're based in, Chiang Mai in Vietnam, right? And, thankfully, they were able to get into the Bitcoin community, figure out how to, create a corporation and all that sort of stuff. But, to take the next step to really operate at, billion-dollar company scale, like you kind of need U.S. capital markets access. And lowering that barrier to entry to just anybody with an internet connection, I think is an unqualified good.
Yeah. It's very optimistic too. It's very motivational, if you will. There are a lot of black pills out there. You can't do it.
Yeah.
You can't
Never
do
black
it.
pill.
It's all open.
Never black pill.
It's all open source, all accessible. Not all of it, but the protocols are mainly open source, and you can build. Mm-hmm. But I mean, with that being said, too, I mean, I think it would be remiss of me not to really lean into Lightning Network, how it's developed over the last 5 years. And again, mentioned it earlier, but it's something that's made me incredibly bullish. I think it's incredibly, I mean, it's not even on the radar of the broader public, but it's incredibly underappreciated within the Bitcoin space, which should be paying attention to it. But like the emergence of the Lightning Network, not only as this very decentralized distributed payments protocol on top of Bitcoin, but this connective tissue between these budding second layer protocols that many would have assumed would compete with Lightning, but we're finding out they're actually symbiotic.
Many years ago, a guy, Zaki Mannion, who was like one of the main engineers and architects of the Cosmos ecosystem. Mm-hmm. I remember when I was at Multicoin, him telling me that, like, look, the master architecture for like a blockchain-based payments network. And again, this is a guy who worked on Cosmos. Like, he was not interested in Lightning, any of that sort of stuff. Because he was like, the master architecture is you have a single settlement blockchain. And then on the sides of that single settlement blockchain, you have these, trustless two-way pegged liquidity pools, side chains, roll-ups, etc. And then all of those liquidity pools are connected with a payment channel network, right? So I've kind of always had that vision in my head of like how things were going to develop. And it's just interesting that the Bitcoin community chose to have the settlement network and then build the payments channel network next, the interoperability layer. And then we had all of these custodial venues like Old Walls, Satoshi, the exchanges, as were kind of our liquidity pools, which, obviously be better if those were non-custodial. But now we have this heterogeneous mix of liquidity pools, whether it's, Alpine Labs style rollups, Botanix style spider chains, Spark with state chains, Arc, of course, the Cashew eMints, all of which interoperate via Lightning. And the really funny thing about that choice versus the choice that the crypto people made is, thanks to having a native interoperability solution, all of these Bitcoin, side systems just kind of work together naturally, right? Like there's a native interoperability language. Like going between rollups and Ethereum is a fucking nightmare, right? Like they still haven't solved that, and they have no idea how they're going to solve it.
Well, let's dive into that. I mean, again, going back to order of operations, which has been core theme of our conversations throughout the last 10 years or 7 years, however long we've known each other. This is order of operations by like Ethereum, other blockchains went for like, all right, we're going to build these second layers. They're going to compete with each other, but some have properties that others want. And if you're in this one, you want to use that one. Like, how do we connect them? The bridge has become the popular nomenclature for how you connect them. But then once you build these second layers, it's like, how do you agree on a standard language for them to communicate? And then you get into tick measuring contest and coordination issues where it's like, oh, you build the common language first, build these individual second layers after that.
Yeah,
and I don't think there was any intention behind that too. To your point, I think it just happened almost.
Yeah,
coincidentally.
I wasn't around at the beginnings of the Lightning Network. I don't think I do know that in the very, very early days, I think because Litecoin had SegWit before Bitcoin did. I think actually I know LND had support for Litecoin for a number of years. It was only sunset in the last couple of years, but there was some early ideas that it could be used for kind of cross-chain swaps, but never it took way too long to figure out that Liquid and Lightning were a good combination. right?
Shout out to Francis and the Bull Bitcoin team for really, and the Aqua team.
Yeah, I mean, that works great. And you look at what Breeze has done with the Breeze SDK, building on Liquid, they built a really slick, nice solution. What Boltz did with submarine swaps between Liquid and Lightning, that, a great solution that, really provided a good user experience. That was something that, I think I was waiting a long time for, and then once people finally started building, it was like, oh, of course. And now seeing it work with, that was another thing that in my years at Lightning Labs, I pitched a lot of things, and a lot of things that were not very well received. The most well received pitch I ever gave was to these Bitcoin layer 2s about integrating with Lightning, and the pitch was very simple. It was, look. You as new side system, you're going to get spun up, and you have two options. You can either go and do business development and get a direct integration with every single one of Binance, Coinbase, Kraken, Wallet, Satoshi, every entity on the Lightning Network, which now is in the hundreds, thousands, that's a lot of people. A lot of businesses, all of who have other roadmaps. And trust me, as a guy that did integrations with Lightning, it is not easy. You can either do all of those integrations directly, or you can integrate with one submarine swap provider that will bridge your side system to Lightning, and you get instant deposits and withdrawals from all of those customers for free, right? And every single Bitcoin layer 2 was like, oh, I want option number 2, please. I want to integrate with the submarine swap provider and get the whole Lightning network for free, right? It's it's the easiest pitch in the world.
Yeah. And then with the eCash mints, it's you just natively build in a Lightning gateway and for in and out of the mint. And it makes a ton of sense. And again, I think it's extremely underappreciated right now. Like, I think Baltic Honey Badger was an incredible example. Like, they just ninja launched Arc from Arc Labs, their implementation on the back end, all the payment processors at the conference. And it was so cool. Unfortunately, one of 2 Baltic Honey Badger conferences I've ever missed in my life, but like watching from afar, there was people paying from eCash mints to Arc. So it was like eCash to Lightning to Arc happened automatically, like completely interoperable. If you're an end user with your particular preferences, that's like the magic of it that people really have not appreciated yet. That unless you know ball, you don't really appreciate it. And again, that's when you think of the potential to re-architect the financial system from the ground up, the banking system from the ground up, and tying this into the whole conversation of people being worried that Wall Street is co-opting Bitcoin. It's like, no, this technology is superior. User experience is superior.
Yep.
The ability to build on it is superior because they're open, interoperable protocols. Like, it's the shelling point is going to be through these systems, whether you realize it or not. And tying this into the whole conversation of companies, whether they're in the Bitcoin space or outside the Bitcoin space, going public to really accelerate this or to accelerate the Bitcoin integration into their businesses, like, and comparing it to SPACs of 2020, which people really anchor to, it's like they don't compare. The upside potential here is massive.
It's massive. It's massive. And I think, like, again, the stat that I couldn't believe when Miles and Square first started talking about it, but is such a staggering stat, is like, no, the 28% of U.S. merchants that can now accept payments over Lightning.
We met right after we both went to went to cost Miles immediately after he got off stage. But like, I remember,
it was like, holy crap.
Me and Matt Corallo being like, oh my God, this is crazy.
Yeah, I mean, the yield, that was nuts. That was a number that I'd been waiting for like 10 years. A thing that we talked about 5 years ago was the Lightning Pool launch and about like earning yield as a routing node operator, and how like eventually someday, real businesses are going to be making real money running Lightning nodes. And now, a non-custodial yield on your Bitcoin, the risk-free rate, Nick Body was talking about that years before we got onto it. Like, it's happening. It's happening for a public company, for
Fortune 500 company.
Yeah, like a big one. I think that's Lightning has grown up so much over the last 5 years and has matured so much. And again, it's,
there's so much hate around it, though. Why do people hate it? I think.
I honestly think people hate it because the mental model of what they thought it was supposed to do is not what it does, right? If you think about what Lightning does from a fundamental basis, is it removes the transactions per second limit from the Bitcoin blockchain, right? What it did was it scaled the transactional capacity of Bitcoin, but it did not scale the number of people that can hold private keys. So and this is, again, the tie-in to what we were talking about with these new side systems and the interoperability, is like what all those systems are really good at is allowing more people to hold their own private keys and transact efficiently. What Lightning is not good at is allowing people to hold their own private keys, because you have to manage your own channel, right? And you have to manage your own hot wallet. So I think, the self-custodial Lightning, UX was never really able to get up to par of, a MetaMask extension or Phantom Wallet or something like that. But that's not really what Lightning is for, right? We kind of always needed these additional systems to plug in at the end of Lightning to solve that problem. Because what Lightning is phenomenal at is allowing for instant global Bitcoin transactions that settle, for tenths of a penny. It's not good at the supporting self-custody. That's not really what it's for. Yeah. And I think people get upset about that, but hopefully this next generation of Lightning wallets that are built on Arc, that are built on Spark, that are, built on these new I call them last mile solutions in a blog post I wrote a year and a half ago, that are based on these new last mile solutions will kind of change that opinion. And, I think what Lightning is really good for is saving every 28% of US merchants from having to pay Visa taxes, right? MasterCard taxes, credit card network taxes, right?
That's great
Not having to
framing.
pay that at
Great
all.
framing. We should just call them Visa taxes, not interchange fees. Visa taxes.
That's what they are. Yeah. Visa and MasterCard are the most profitable. They have the highest operating profit of almost any company in the S&P 500. They make 60% gross margins or something. It's outrageous.
At incredible scale.
An incredible scale for not really doing that much, right? They just pass messages between banks.
Yeah. Well,
Ripe for disruption.
I mean, we could. That's why I like to nerd out about this stuff with you. The other thing too is the Lightning Network, I would argue, is so good at what it does, particularly from a privacy perspective. That's really hard unless you have companies like Block publicly reporting their numbers to actually know what's going on within the network. And so people see that opacity, I guess, and say, there's probably nothing going on in there. But I can tell you for sure. I think literally via this podcast, I receive at least, maybe not every minute of every day, but every 5 minutes at the very least, I receive a Lightning transaction on average every day.
It just keeps growing. And I think, there's so much of the comparison was always comparing Lightning to these other shitcoin systems. But if you just look at Lightning's growth independently and not comparatively, it's fantastic. I mean, the growth of volume, the growth of nodes, the growth of channels, the growth of companies, the growth of investment dollars into startups, all of everything is up and to the right very steadily at, 20 to 50% CAGR or something like that. All of those things, all of the metrics that we tracked were great. And especially the most important one, volume, I think we were, I don't know exactly where the network will end this year, but if you look back at the old River reports or the Arcane reports when they did the state of Lightning, it was 5 years ago, Lightning was doing single digit millions in volume annually, right? 2 years ago, maybe Lightning got to, hundreds of millions, if not billions. Now we're already on the order of, potentially $10 billion in annual volume, if not more, right? That's phenomenal growth. And there's hundreds of, I think Visa and MasterCard combined generally for $20 trillion in total payments volume. And about half of that is debit, which is the right comparison for Lightning transactional volume, right? Getting up to $10 trillion in total volume. The way I looked at that when talking to entrepreneurs and businesses, it's look, there's 100x here left. Right? Or 1,000x here left.
And if it keeps growing at that rate, we'll get there quicker than anybody expects.
Exactly. And again, and the way these network effects work is you just kind of unlock greater and greater scale as each entity comes on board. And Square bringing on, almost a third of all US merchants to access is an enormous unlock for scale. Right. And the fact that it works and it's being operated by a really quality professional company like Block means these people are going to have a good experience. And all of a sudden, this stuff goes word of mouth. If you're as a brick and mortar retailer saving 3% because you switch to Lightning,
you're not paying the Visa taxes anymore. You're not paying
Visa taxes anymore. You're going to put a little note on your terminal that says, please, discount if you pay with Bitcoin. Right? Here's how you pay with Bitcoin via Cash App. That education is just going to be word of mouth, which is, I remember in the early days of podcasting 2.0 with Adam Curry being you Lightning people don't understand how big this is. Every podcaster is going to be shilling Lightning to his audience, to his or her audience. They're all going to be saying, here's how you set up a Lightning wallet. Here's how you start streaming sats to me. It's true.
And I mean, podcasting 2.0, I've talked about this a few times, but I think we were top 5, one of the first podcasts
Mhm.
one of the first 5 podcasts to put a Lightning address in our RSS feed. Like it is, and it's like, it's not going to replace advertising revenue overnight, but like it is the thing that makes me most optimistic is, number one, it's been consistent up and to the right. It's not crazy parabolic growth, but slowly but surely more people are discovering Fountain and other podcasting 2.0 apps, downloading them, listening, contributing. And it's happening. The growth is there. It never like went up and then died and never went back up again. It's been consistent up and to the right. And the other thing, last thing, is I know we've got families. It's Friday afternoon here. But the other, I think it's important to touch on for anybody who's trying to compare Lightning to other L2 protocols and looking at TVL specifically. I think that's another thing. They look at like channel capacity, or like, oh, look, it's up, it's down, it's not as much as what's in wrap Bitcoin on this chain or whatever it may be, and completely misunderstand the dynamics that is actually an incredibly high signal that this thing is working because you can do more with less. And another factor that many people don't take into consideration when they're just opining on this as a pundit is the fact that the Bitcoin price goes up. So you don't need as much Bitcoin as in these channels as before if you're denominating the purchases in US dollars, and it takes less Bitcoin to complete that purchase.
Absolutely right. And you know, I don't pay nearly as much attention to the crypto people as I used to, but it was really funny a couple of years ago when the Uniswap founder all of a sudden started coming out and saying that TVL was a bad metric because actually what we should be optimizing for is like capital efficiency, volume divided by like total TVL.
Capital, yeah.
Yeah, locked capital. And I was like, oh, yeah, that's what Lightning people have been saying this whole time. Like, yes, like we were supposed to be designing capital efficient systems here, not just having people stick their Bitcoin in hot wallets and put them at risk for vanity purposes. Like that's always been dumb. And I think, again, like the fact that Lightning can process the volumes it is processing with the signal of block being able to earn 10%, that is the natural signal that shows that there's a capital shortage in the network, finally, right? That means that there is more demand for payment capacity than there is actual capacity allocated. And that is the market signal that should incentivize more entities to add more capital to the Lightning Network to soak up that demand, right? And that's how it should work. Now, the tricky thing is like, you know, how do you actually measure that? It's kind of hard. You got to like be constantly monitoring the network. You got to look at the fee rates that are being charged. You got to look at like how often certain nodes are opening and closing more channels, right? Like you got to look at, I think most importantly, how much volume is flowing through Lightning Labs' loop service, which is, you know, a big sink in the network and processes a lot of submarine swap volume. And without running the nodes yourself, like that's kind of hard to find. It's doable to be able to suss out if you really know what you're doing, but it's kind of hard to find. And really importantly, the entities that are doing well, they don't like to share their secrets on Lightning because they're making a lot of money and they don't want to invite new competition.
Yeah. No, but like now there's people that are noticing this market need of companies like Voltage, Amboss, Lightning Pool, obviously, like they're building the tools to make it easier than ever to do that, participate in that. That yield generation. Yield is a dirty word in this industry, but this is true yield. You lock up your capital in a 2-2 hash time lock contract that you have control over, and you offer a service of facilitating transactions on the Lightning Network, and you're going to get paid for it.
Yep, it's a useful service and becoming more and more useful every day.
Yeah. But we're gonna have to wait 5 years for the next one. I might have like 2 more kids. My hair might be completely gone by then.
Who knows? Who knows what's going to be happening in 5 years? I'll do my best to make sure it doesn't take that long this time.
All right. Where should we send people? What should they look out for? Last message.
Follow me on Twitter, at Ryan the Gentry. That's kind of where everything is happening. I think it's going to be, I'm very, very, very bullish on 2026. I'm always very, very bullish on Bitcoin. But most importantly, I'm bullish on Bitcoiners. And I'm really bullish on Bitcoiners taking kind of this asset and this market to the next level, and all kind of growing up together, professionalizing and winning the war for the world's global reserve asset.
In other words, we're going to win. Stay positive.
We're going to win. We're going to win, freaks.
Peace and love. Thank you for listening to this episode of TFTC. If you've made it this far, I imagine you got some value out of the episode. If so, please share it far and wide with your friends and family. We're looking to get the word out there. Also, wherever you're listening, whether that's YouTube, Apple, Spotify, make sure you like and subscribe to the show. And if you can leave a rating on the podcasting platforms, that goes a long way. Last but not least, if you want to get these episodes a day early and ad-free, make sure you download the Fountain podcasting app. You can go to fountain.fm to find that. $5 a month, get you every episode a day early, ad-free. Helps the show, gives you incredible value. So please consider subscribing via Fountain as well. Thank you for your time, and until next time.